Well, hello folks, I'm LA, the little TA today. Today I want to look at the mega caps. Why? Well, because they're about to report this week, at least the vast majority of them. Are they important? Well, that's actually not even a good question, right? I mean, they are the market. You've got roughly 35-40% of the market that's tied up in the mega caps, and a large percentage of them are reporting. So let's get to it here. I'm going to go straight through them. I'm just going to take them in alphabetical order. I'll start with Apple, and we'll run through the five that are reporting. Okay, here we go. Apple. So what do we got with Apple? You got to break out on all time frames. I mean, this is as bullish as it gets. Now, if I had something bad to say about Apple, what I'd say is, hey, you don't have a huge amount of run left in this, at least from the projections that we have. Your intermediate term, you got around 280. You're sitting at 260, plus. So you got about 20 points. You got about 10%. So, if you're wanting to make a 10% trade with a very high probability of getting there, well, Apple's your choice. Breakout on the daily, breakout on the weekly, breakout on the monthly. I mean, it doesn't get any better, folks. What else can I say about it? You're not extended, and you got those projections. Let's move to the next one. Amazon. What can we say about Amazon? Well, Amazon probably is the best one in terms of a trading opportunity, just because of where it is. I mean, look over here at your cube. You got bullish on the long term, sideways here on your weekly, bearish on your daily. So, if you think about those three trends, essentially this thing has a long term up, right? The intermediate term has had enough damage to where it's been sideways, and your short term is bearish. Well, that's kind of a perfect opportunity as long as long term is the real trend, which your longer term trend is the trend that you have to trust. Then you've kind of got an opportunity, right, to buy things. So let's look at the chart and see if that's true. You got a retest regen that took place on a long term way back in April back here. It all held, right? That was all good. So there's nothing here that says you got a problem. So long term, this thing looks fine. If we go to the weekly, now the weekly gave opportunities twice now to get in at cheaper prices. Back here, if you look at this, Magenta says that you have never tested this breakout that took place right here. If you haven't tested it, if it comes back to test it, it's almost guaranteed that you're going to get a pop because it's more than 6 bars it hasn't tested, and that's on a weekly, which is hard to do. And so, you got this floor underneath you to support. And so, at this price point, it's 20 down, so it's about 10% deeper, right? You'd have to fall back 10% for this thing to actually kick in and take you back up. But, anything down in here, let's just say earnings drop it down there again. Well, that's pretty good opportunity to pick it up. If I look on the daily is telling you that you have a bearish retest regen. So here's your break, gets down, comes back, test once, gets down, comes back, going to test again, it looks like, right, into earnings. Well, the second test, odds are pretty low that it's actually going to regenerate to the downside. Odds favor it to break to the upside. And so Amazon coming into earnings here is set up better than most of the others in terms of opportunity to get long and to make some money. Now, if I look down on the ABCD structure, let's just sort this by status to see which ones are actually invoked. This is invoked. In other words, the suspect means it's already active. They're both bullish. Your targets are 63 and 30. Well, the 30 is almost met already, so that one's kind of, that's the short term. Your intermediate term, though, is 63. So 63, you're at 26, 25. That's a pretty good move, right? That's more than 10% to the upside. Let's see what else. Here's a confirmed long-term 257. And so it looks to me like, you got a 263 here, a 257 there. It looks to me like around 260 is a pretty good target. You're sitting at 25. So you're looking at another 35 points. So you're probably about, 15% or so. Good opportunity. Let's go to the next one. Well, next up here is Google, and Google has already taken off. So, the opportunity, yeah, there's probably some more upside if we look at the ABCD structures. They're all confirmed suspect, right? So they're all activated to go higher. And high price on that is 372, and we're sitting at 250, 260. So another 112 points. So there's certainly opportunity to take this thing higher because if you go over here and just mark out your ABC structure, that was on 623. So if we go back, that's somewhere about right there, it looks like, up to there, right? Straight move, retrace, and now the projection of higher. And so there's a good opportunity here in terms of the amount of price. Definitely, this is the strongest. I always tell folks you want to buy the strongest. This is the strongest. So if we were to get weakness on this, this probably would be the one to buy on the pushback down. Now you've got this big gap area here. That's 217, which is really the takeoff here. So if it were to for whatever reason break these congruent swing point lows, let's just say it disappoints and it breaks that, man, that would be an opportunity if it were to come back into there. It would look like hell, nobody would want to buy it, but it would be a good opportunity. And if you look over here, you're young bullish. I think this is a great choice. Now, Google was the one I thought was probably going to be the one that got hurt the most by AI. Well, now it's the best in terms of the recipient of the AI fever. All right, next up here, Meta. Now, Meta also, just like Google, extremely strong. They both happen to be in the exact same sector. I mean, this run from back here in 23 straight up, I mean, that is classic. That's a tenfold increase, folks. How much more is left? Well, if we look down here at the ABCD structures, there's a projection long term for 1054, so it's not like this thing is over with. I mean, we're sitting at, what is it, 738. So you're talking about 300 more, 30% more to go in terms of the structure projections. Even the intermediate is pointing to 1002. So, I mean, these are big numbers. So I wouldn't, discount Meta as a good trading platform, higher. So long term, nothing wrong with it, right? Bullish, 58%, fine. Look at the weekly. You came back in now, and this is where it's kind of iffy. You came back in. This was a retest regen. Here's your breakout. You actually retest and fell on the weekly. Now that's kind of a black eye. This is your failure. That doesn't say that this thing is turning bearish. What it says is that your bullish move, right? What was up. That's anytime you break a retest regen, you don't regenerate. It says whatever that direction was, in this case up, is no longer up, at least on this time frame. It's more likely sideways. Now, that may or may not hold because eventually sideways it has to break either up or down. So the question is like, how long will it go sideways? And so, that's where you kind of get into the timing issue of this. Longer term, this thing says, hey, we're going higher. Intermediate term, it says, we could consolidate here for a while, and maybe that consolidation range that's in effect right now, which is roughly about right there, maybe that expands and it comes all the way down to here. Or maybe this is all it's going to be and eventually it's just going to break out and start heading higher again. You don't know. But what you do know is that this has a little bit more of a question mark to it near term. Now, if we go over to the daily, that's where we can get some information this week to tell us what's happening. You just got to break out here. It turned it sideways. That's this. And you've got a retest regen going on right now that has been tested twice already. And so this, this potential push back up could get it higher. Now, right above it is another retest regen off of this swing point low. And that one has only been tested once. So once it gets into it, that will be number 2. Again, second test, odds are not great that it's going to regenerate to the downside. So this thing certainly can move higher. And if so, it can come back up to the top of this range at least, and then, test to see if it can get out. you do have congruent swing point highs here, and you've got a swing point high on your weekly. So a breakout of this level will get some juice. So, that's the potential on earnings and on a pop. Do I like this? Do I think it's going to pop? Honestly, I don't know. Is it a good risk reward? Yeah, it's a pretty good risk reward. The thing that would worry me is if this expands to the downside. You got a swing point low, price point 691. If you come over here and you look at this one, that's probably the same one, 690. So roughly the same price points. You've got congruent, multiple swing point lows, multiple time frames that would break, that would drop you down and expand the range. So that's the risk. So I don't see this as probably the highest probability trade. Long term, it's going to be fine. Last one up, Microsoft. Let's see what that one looks like. Okay, Microsoft. Now Microsoft had a fantastic pop. Where was it? Back here, right? Popped up, just skyrocketed, and then it did a multiple time frame breakout right here. And when you get that and you're at all-time highs, it can extend, and that's exactly what it did. And now it's just basically consolidating up here between about 550 and 500. Okay, so that's Microsoft. Long term, perfect, nothing wrong with it. You want to go with it. Where would be an ideal spot to get in? Well, this price point back here would be ideal. Are you going to get there? Probably not. But that's the ideal place. If earnings are sold, you got congruent swing point lows, so you could get a little faster push down towards this area if it disappoints. You do have some volume sitting at the top, so it's eventually going to go up there and test again. Is it going to be right now? Well, you don't know that, but again, if you think about trading management, you could certainly take a position with the assumption this thing is going to move higher, and if you're wrong, you add back to it lower, right? You basically improve your price points, and the idea is that eventually, the long-term trend is going to take over and this thing's going to take off. And if it did get back to here, it'd be a great buy, right? And so, you average in much lower, you get your price point to where, maybe your average is like down in this area somewhere. It's a great buy. And so, you can always put your price management in there and make it make sense. If we go over here, let's see what is actually activated, and the only one is 532, which is not that far. It's an intermediate term time frame. So this one doesn't look like it's ready to just blow out the top again. It looks to me like they're fine longer term. I would like to try to get it a little cheaper, and everything looks great. So we've looked at the 5 mega caps, right, that are all reporting. Did I say anything bad about any of them? No, they're all look pretty good. The bar is pretty low in terms of earning expectations. I think the real thing that's going to happen is, are they going to say they're going to keep pouring money into the infrastructure and they believe it's all peaches and cream kind of stuff? If so, they're probably going to rock higher. And if so, the market's going to rock higher. And we're into that time frame where that's usually what happens this time of the year. So, I can't get negative here. I just can't get negative. I like the way things look, and hopefully you've got your money staked out here somewhere and going to make some coin as things try and push higher and higher still. That's where we're at, man. Have a great one. See you next time. Take care.